Alrighty, so what we're doing right now is we're going to do a back test on NVDA. I'm in the on-demand feature of Thinkorswim. Pretty much, in order to get to on-demand feature of Thinkorswim, this is a real-time Thinkorswim here. You would press the on-demand button up in the top right corner, and it takes you into the on-demand virtual account feature, right? And I have actually already pre-selected a date of doing 2017 on September 11th. And at about 10:50 a.m., this would be Pacific Standard Time. And so we're just pretty much going to do the rolling four strategy from Mark Monroe and utilizing his calculation on his Excel sheet as well. So let me actually pull up his Excel sheet. And I believe I have it in my iCloud. And Dark Knight Strike Price Method worksheet. So obviously what's a little tough is that although I have his worksheet, and as he states in his trainings on the Come Up series, we would utilize bar chart for our 2-year performance. So let me go ahead and pull up bar chart in Safari. They already up, bam, it's already up. Let's get him off of there. And let's get that off of there too. So we have bar chart up. I'm gonna be in NVDA. Now, the normal way, not nada, NVDA. There we go. Did it go to nada again? I'm so upset. All right, we did NVDA. There we go. Darn autocorrect. Thank you. Oh, you're still doing it to me. NVDA. Don't you do it. Come on, man. All right, NVIDIA. So obviously in today's time, what we would do as we pull this up is we would be selecting it based off of its 2-year performance here on the performance report. We're gonna do the 2-year out expiration. Let's go to the performance report, please. If we were to do the 2 years out performance, obviously we can go here. We can see the 2-year performance, and we would obviously punch that information into the Excel sheet for the calculation. But since we are in on demand and Thinkorswim, obviously bar chart is current time, so it's not going to really give me 2 years out. So what we have to do is change our time frame on our chart and technically do this stuff manually. So as I do this here on the chart, I'm really going to be making my notes on my iPad so that I can write down all the information. But the objective would be for us to have this data available all through the on-demand. So we're really going to try and truly track this. I have my account fully resetted with $100,000 in the virtual account on my chart. So I'm going to track this, be able to keep all the trades on there and go from there. I have settings right now of the 5, 10, 20, 50, and 100 EMAs with the S&P comparison charted on the left-hand side, my pricing on the right-hand side, got volume, we got all that good stuff. I like to use multiple time frames as well, but we're not trying to go deep into multiple time frame pairing, but I do use a 30-minute chart for daily entry to get a good entry point. Also use a 15-minute, and also still look at two. Here's a 30-minute chart. Here's the 5-year weekly. Here is the 5-day, 5-minute. Sometimes when I want to get a really good entry, and then also have this other setup by Don Kaufman of the expected move. So, but let's look at what we got here. So 2-year performance, as we go to bar chart, real quick so we can understand what the 2-year performance is. What it's pretty much looking at is from 2 years ago, what was the period open 2 years ago? So 2 years ago from today's date, and today is October 9th, the stock price was at 265.54. And its performance to today's current price of, where we at, 550.51 is $284.97. So 2 years ago, the price was at 265. Today's price is 550.51, and the performance thus from the 2 year ago point to today is $284.97. So it's not basing it off the period high. It's not basing it off the high, all-time high for the 2 year period. It is basing it off of where the period started 2 years ago and its price today. So we essentially have to do that in on-demand on Thinkorswim, meaning we have to go over here and see what the price is. So again, we are September 11, 2017, and what we're doing is we're going back to this very first day here, because that seems to be the period start date, and that price is, the close of that day is up here with $22.65. And that is 9/11/2015. So the starting point we have is, again, I'm gonna make these notes on my iPad on the side here, is 22.24, and the today price on this NVDA chart, the today price, the close or whatever our close is at this time, is 162.92. That's what the price is, or 162.25 is our right now price. So now is 169.29. So let's go ahead and do that math so we can get our 2 year performance, right? And I'm show you on here, but I'm gonna start doing this stuff over here on my iPhone and iPad. So 169.29 minus 22.24. It's going to get us a 2 year performance of $147.05. So we're going to pull up our Excel sheet for the strike price. I believe this is still sharing. Am I still sharing my screen? No, I want you to take me over there. I believe I'm still sharing everything. Okay, well, let's do it. Go out of there. Go back over here. Let's pull up the Excel sheet. Hopefully it'll open it right here. Thank you. Recent, Dark Knight strike price. Pull me up. All right. So now I'm feeling even more confident that I'm on the right screen. So these are some actual real stuff that I have in here. So we're just going to start down here. I'm going to throw in NVDA. And the current price is 169.25. And the high that we have of this 12-month period here is 174.56. 74.56. So it's not at the high. The 2 year performance is $147.05. We got that from looking at everything from the start of this period to the right now price. And so therefore the 2 year performance times 1.5, because you'd be getting out at a 1.5 years from this 2 year option, is $98.03. Then, so therefore the 2 year strike, the 2 year price expected would be $267.28 in 2 years from now. And obviously we know what the stock price was at about September 2019. So we're going to shave off 10%, which is 26.73, which gives us a 2-year price minus the shave of 240.56. So over here to the far left, what is the strike price? It tells us to pick for a 2-year out strike is $253.92. So let's go to the options table and see what we got. So the strike, making a note on my iPad, gives us $253.92. Let's go to the trade tab and let's see what we have for options of strikes. And the furthest out we have is January 2019. So this is not quite 2 years in full, but let's go ahead and just run with the numbers that we have and see if we can make something happen. So I got all strikes on here. As you can see, all strikes, so it's going to be pretty long. And what do we have available? All right, so maxing out for us is the 250 strike price. And the strike price the Excel sheet gave us was $253.92. So obviously we have no choice but to pick this one here. Good open interest. Looks pretty good. And we have the price of this thing popping up. This is really getting on my nerves because it keeps doing this. Sorry, you guys. Let me get rid of this real quick. I don't know why it's doing that to me. So let's go ahead and do 250, and we're going to select the strike price. And obviously, if we did one contract, we're looking at spending how much at 1090 is what the price it has for right now. If we did one contract, we would spend $1,090. So for the sake of math, let's work with the power of 10. So we're going to do 10 contracts, which is going to roughly put us at $10,000, right? So in each situation, let's try and get to $10,000 of an investment that we're going to put in each quarter. Now, before I put on this trade, particularly here for the 10 contracts, again, in on-demand, you're looking at the real deal of what it was that day at that time. So we're really looking at September 11th, 2017 at 11:02 a.m. Pacific Standard Time. And looking at the chart, I'm going to pretty much go off of a basis of saying, okay, we're around the quadruple Ritchie period. Looking at this chart, obviously we can tell it's an uptrend. I don't particularly have lines. I think these are lines from really the future on here. But we have a bounce off of the 50 EMA as a support and old resistance. See that horizontal, that zone area there. But that was also earnings. But then we also have another bounce off the 50 EMA here. And it obviously came up. So it looks like it's creating a wedge, right? We got a flat resistance here at the 173 where it created the high, bounced down, came to the 50, came up, created a higher low, then came up again, hit that near the high, came down. We have a higher low. So we have a higher high, higher low. Looks like it's going to be creating another higher high and possibly breaking out of this ascending wedge. So it sounds like a pretty good buy point to me from a technical standpoint. You know, I primarily use the EMAs, but just to give us another visual, right? Let's look at it without any moving averages on here. So you can see obviously uptrend, and then it looks like it bounced a little, you know, through a channel here. But it's also looking to create uptrend. But it's also, let's just go ahead and throw in the Bollinger Band, since I know that's the popular usage with our come up cousins. So we're within the bands. We're at our mid price, which is pretty much the 20 exponential EMA is how I have it set up. So we're looking like we can continue to make a move up here. So I think this is a good buy day, right? A good buy point, green candle. And we're looking like we're, again, going to be on our way up. So I'm going to take it back to my my normal setting of the 5, 10, 20, 50 EMA with the 100 simple moving average. I even actually have a 200 simple moving average on this as well. And since we're long term, right, we're not nitty gritty on an exact day entrance. We just see that we're looking to continue to make good strides here. So let's go ahead and enter into our trade. And look at that, it changed 10 cents since we were jabbered on. So I'm going to confirm we got $11,000 investment. And let's see what happens if I drop this down one contract. Does it take us to 10,000? All right, so let's do 9 contracts. We're going to do, we're going to do 9 contracts at this price. Let's go ahead and send it in. Bam, we got executed at $10.78. 9 contracts at $10.78. Stock price is at 169.18 or 16. And today's date is 9/11/2017. So that is quarter number 1, or that's our first entry in September around the quadriple. That's funny. Around the quadruple witching period, which would have, those news strikes come out pretty much this week. So since we're in this for the long term, right? And what did we pick again? I'm sorry. Let's go to a trade. We picked a January 18 January 2019 expiration. So we are pretty much planning to be out of this trade most likely in a year, right? Because we can't necessarily hold it for a year and a half because that time frame doesn't go all the way there. So we're looking to exit truly around September of 2018. Yeah, I'm saying that right. All right, cool. So when you're doing, your back testing and on demand, especially with this strategy, pretty much we're kind of just going to the next, quarter of the quadruple witching. We're planning on holding, right? The price doesn't truly matter, or the time frame in between doesn't truly matter, since we plan on holding for a year. So let's just go out to the future, to December 4th, 2017, and we're at the 11 o'clock hour Pacific Standard Time, and let's see what we're looking like right now. So if we go back, let's go back to September 11th. So where were we, right? So we bought right here. Well, dagnammit, look at what this thing done did. 165, and it created a new high of 218. And that was a nice day, right? This nice creating a high. And then we have some pullback here. Honestly, I can't remember what the pullback was in this December timeframe, but we broke through the 50, and it looks like we've tagged the 100 simple moving average. But good news is we are, let's see, stock price was at 169.16. Stock price right now is at 189.79. Let's look and see what the value of our contract is. So right now we are up 31% with a profit, or profit so far on paper of $3,078, so 31% up. So I know this will be interesting, so let's just do it for shits and giggles. Let's go to November 10th to see what the value of this contract was at that point. So let's go over to November 10th. And we're going to come back to December 4th. November 10th. Oh, I'm going too far. November 10th, 2017. Making a note on my iPad. Look at that, 218.67. Let's see where our strike is at, or what our value is at that point. So on this day, we are up 168%. Just making a note on my iPad. and for a profit of $16,353.10. That's dope. That's dope. Honestly, you know, let's see, what did we put into the play again? We bought 9 contracts at, so we put in practically $10,000, and now we're at a profit of $16,000, and that is September 11th to November 10th. Real talk, cats would be out. I know there's some people that take profit. I mean, I'd even take profit, but we're doing the rolling fours and we're doing the long-term game in this back testing. So let's keep rocking with it. But that shows you, right? It's pretty nice. You got a good stock. You got it uptrending. It's in the tech sector. Honestly, I can't remember what was going on back in 2017. I was not following NVDA at that time, so I really can't tell you. But let's do this. Let's take a look. See what the SPX was doing at that time. Let's look at the S&P 500. And S&P 500 around this time was creating new highs, and obviously that's on an uptrend trajectory, right? So let's go back to our NVIDIA. Trying to make it as real as possible. Like, what are we doing around this time? What would you be doing if you were really in the play? You would be looking at the S&P. You would be looking at probably even like XLK or some other stuff, right? You'd be looking at everything, considering what the news was at that time. I'm not going to consider what the news was at that time right now, but I know we would all be kind of doing that. So let's go ahead and move forward and continue with our quadruple witching period. So now we're in December 4th. After the highs, looks like we created like an M pattern, right? Up, low, off the 10 EMA, looking pretty sexy to continue to run, but it says not, we're stopping there, and then we have drop, drop, drop. And as NVIDIA is dropping, it looks like the S&P is still going high. Yeah, S&P was just like, oh no, I'm gonna keep blasting up. I'm gonna create a new high. You just keep going, having fun. So maybe I'll make a note of what happened around this time frame in December for NVIDIA. But would we buy on this day? Probably not. But we would definitely see that it's hitting its 100 simple moving average, which is a good like bedrock of a support level. And it also serves as like a gap line here and also a resistance. And I don't know if you've heard this phrase before, but old resistance creates a new support at times. So I know there was some area here, people were looking for that bounce there, and that would have been a good indicator that, hey, that's at the 50. Here's, you got some resistance here, and now it's creating could be creating a support. It closed down but gapped up, and then it closed above the 50. And if you entered into a trade right there, I think that you'd be like, okay, but considering you have 3 days of this red stuff, probably still want to see what it's going to do. But then obviously it broke below and fell all the way, which I guess would be a zone of support. You got resistance here, you have a gap line here, and then you have a bounce up here. So it looks pretty good. So let's look at tomorrow. And yeah, you're looking at some pretty good resistance there. Not resistance, you're looking at some pretty good support there, even though it opened low, but it bounced up. So you would kind of be looking for some confirmation that's going to continue its run. Honestly, I would like to see this bad boy get above the 50 and continue to make its run. So let's just bounce forward to tomorrow. Sorry, it's going to pull back and I got to keep doing this. So this is looking good. Let's try to be as true to form of our trading habits and what we would normally do, what our trading style is. This is looking good. It's moving its way back up. Let's go to the 8th. Now, backtesting, y'all, real talk, is some boring stuff. And it's not really boring. I mean, it's boring as you go through the process and it's tedious, but the end result is giving you an idea of being able to have traded the market and not having to test your theories and your processes with real money, but you can do it with paper money to get an idea if your strategy is working. So it looks like we've bounced up and we're creating some type of base here at a level of support. Now, I can't tell you when I drew this horizontal line, but I'm sure I drew it in the future. But it's looking pretty sexy right now. So let's see if we can get a bounce up. And we're in the quadruple witching time period too, so I'm sure there's a contract or a new expiration date out there. Okay, still not quite at an area that we like, or that I would say that I would probably bought in. Oh, good thing that we didn't. Look, it had 100 simple moving average, popped up there, met some resistance on the 1050 EMA, and then continued to push it back down. While all at the same time, the S&P is still going higher. This gray line here is the S&P. I'm really not sure what's going on in NVDA at the time. Maybe it's the whole quadruple witching and people just the volume, exiting, getting out. So let's look ahead and see what it's doing tomorrow. And I'm serious, you guys. I did not follow NVIDIA back at this time frame. I was really getting my feet wet with options trading, so I didn't know what was going on. And I don't know why it's taking forever. But let's go over here to the option chain. Let's see if they threw another one out there. Oh, look at that. Quadruple witching period, they threw another expiration. So we know what expiration we're going after now for January 2020, which is obviously earlier this year, as we're recording this on October 9th, 2020. Let's see what the chart's looking like. All right, so the 100 simple moving average is holding, which is good. Like I said, it's like that bedrock bounce up. Let's go to Friday. Pushing my MacBook to the limit right now. I don't know if you can hear the fan blowing. That's a positive sign. Let's get to the 50. If we can get to the 50, then we can start working with some numbers. Let's go to Monday, coming up on Christmas. I can't remember I was doing that Christmas. Oh, look at that. Look at that. Gap open after the weekend. And it says, let's go. Confirmation. It closed above the 50. Let's see what it did after. Ooh. Stopped and closed at the 50. December 20th at 11:15. Stopped and closed at the 50 again. Look at that. Let's look for a green candle. Green candle. Oh, Doji. What are you doing to me, NVIDIA? But this is, I mean, this is one of those waiting periods, right? You got some, all right, it's not breaking through this. What's going on? You got resistance here, just stopping. And then you got this over here too. So it makes sense. This zone, this region area, right? This is some resistance area. Let's pop above it. Let's get above that area. I'm telling you guys, this is the tedious part of doing back testing on demand. But honestly, what would you be doing? Would you have entered in here? I mean, some people say, man, that's 100. That's 100. I probably would. I normally would do the 50. I'm sure you would have loved for me to just enter down here so we can move on to the next quarter. But I didn't. So let's go after Christmas, because that obviously closed below the 50, but then now we got a bullish engulfing, and that's the day after Christmas. Let's see if we can get in this before the New Year. Come on. All right, and now you have this day where it opened and closed above the 50. Honestly, today looks like a good entry. Let's just go to tomorrow. And you got another close above the 15. It looks like it wants to go. All right, so let's enter in here. So trade number 2. We're in the 4th quarter. We got December 28th, 2017. Stock price is roughly at $198.03. So again, we got to do our math on the 2-year time period. This is where we got to go now to. We got to go now to the Excel sheet. What was our starting price? Our starting close price was, what is that? We got to look at it up in this area right here, folks. That close price was 33.14. So 33.14, and the price that we're at today, the now price is 198.09. Right, because we know that's the price that it is right now. And actually, let me pause this so this price will stop changing. Or no, I'll continue playing in a second, but just pause it. Just so you guys can see, I am doing legit math here. 198.09 minus 33.14. So we have a 2-year performance of 164.95. That's ridiculous. I mean, like, if you were really in NVDA back in the days, this is like bananas. All right, so let's do it again. And I'm going to keep that top one up there for the sake of us doing this in this recording. So current price is 198.09. The 52-week high. So let's look at the chart and pull out. Where's our high at? Bam, our high is 218.67. 218.67. We're not at the high. 2-year performance from my iPad, 164.95. So the 2-year and 2-year 1.5 times 2-year performance times 1.5. The 2-year price 308 minus the shave puts us at 277.25. The 2-year price, and this is taking into consideration a 10% correction. So it says that our strike we should select is around 292.65. And now that we are going again to the furthest out opportunity, you see we still have our position for January 19 on. We're going to go January 20. It tells us to pick a 292. Look at all these sexy strikes available. So let's go ahead and pick the 290 strike. So strike will be 290. That's expensive. It's not a high open interest, but hey, we're so far out. I mean, ideally, I'd like to go for one of these that are over 100, but it's all good. But we're going to go strictly with the math that's been given, right? And so if we're going to almost pay $2,000, we can only really afford 5 of these contracts if we're going to stay consistent with the $10,000 investment. So we're going to do 5 contracts. And it says we're going to get it at, what's the price? Let's press play so that thing can go back. These prices can fluctuate. So let me delete that, and I'll select it again. Man, what's that mid price? Can I get that mid price though? We'll just put it in at whatever this thing says it is. I'm sure back then people would get a better price. So 1955 is what it says. Let's see what how it shows us in the top left corner. This thing's doing it to me again. Is it not gonna let me buy it? That's a little bit of a problem. Maybe let's go to the monitor tab. It doesn't even have that it's trying to work it. Reset, homie. Like it says, it's working. Like, come on now. Again, on this day, we're at 37% profit. But that bad boy was up at 160 something. I'm not even a little heated. It's all good. All right, for some reason, it's not letting me put this on. So I'm going to cancel the order. Let's try this again. The 290 strike. Go here. We're going to do 5 contracts. $9,775 invested. Send it off. Boo Boo Johnson right now. This is Boo Boo Johnson. 198.21. All right. Cancel and replace. Let's do a market order. Give me whatever price you want to give me for these 5 contracts. Virtual cancel. Yeah, virtual cancel. Give me whatever you got. Execute. Oh, Lord. Not while I'm recording on the Zoom. Frustration with the on-demand, you guys. You see how the first one went through nice and smoothly, but this one was like a stank right now. That's not cool. It's showing me my position down here. Give me this other position. Stop being a Boo Boo Johnson right now. The stock's moving. I put in a market order. That's the crazy part, right? Look at it. This is a market order. And it's not even giving it to me. Give me the market order. Let's do this. Let's cancel our order. I'm going to go back to the 27th. Obviously, it's gone because on the 27th, we didn't put in any trade. I'm going to go back to the 28th. Change the time frame to 11:15 a.m. And let's see if it just gives me another opportunity. Okay, we have real-time data for the on-demand. 290, put it in, give me 5 contracts. Don't do me scanless, because now I just have to write it down on a piece of paper. And, oh, you want to be like, not like Mike. You want to be like, beautiful. Maybe it's because the chart hasn't been able to pull up. All right, I'm going to pause the recording, see if this bad boy is going to do its thing after this cycle. I won't keep y'all waiting. All right, welcome back. Let's see. All right, so the chart pulled up, but the trade still has not gone through. Let's cancel replace. Maybe let's go with mid. Let's see what we're going to do if it gives us a mid. Send. Oh, on demand. You're embarrassing your boy right now. While I'm recording, trying to make a video for the homies and the cousins and the fam. Trying to prove a point, and you're making me look stupid. But all is not lost. Let's try and replace order, market. I'm just trying to show y'all like I'm really trying to get this in right now. Maybe it's not wanting to give me this. What if it'll give me the 280? Let's say, give me the 280 then, homie. 5 contracts. How much is that going to be? A little bit more, but whatever. 5 contracts, 280. If this thing goes, it's not going to. I was going to say, this thing goes down to the piss. but it didn't go through. So this is what I somewhat don't like about this one, but it's okay. What we're gonna do here, y'all, is switch it to the 290. I'm gonna take a screenshot and I'm making a mental note over here, right? So as you guys can see, we're trying to buy 5 contracts at 20. Is that a 290? Oh, heck no. No, it's gonna mark it as go. Let's get the limit back to the right price. I'm trying to like 5 contracts at 1948. Okay. So if we do that math, right, not outside all those fees and all that good jazz, that means we're doing 500 contracts, 500 shares times 19.48. What are we making? We're spending $9,740. And we're just gonna make a note, right, of what we bought on the day. So again, stock price is about 198.10. This is December 28th at about 11:20 a.m. because this thing is just not doing it for us. But I will take a screenshot for us all, so you know your boy really did. I'm gonna send it, so now it's gonna be on there. Watch the next one work out though. Pretty pissed off about this, but watch the next one work out. So this is our buy, right? Oh, but I can do this for you guys. I can do this. Always gonna put in text notes. Text notes. Art. Okay. 9 contracts. I know y'all like this guy boring me as hell right now. It's all in the love of research, family. It's all in love of research. 12, 28, 17, bought. Bought 5 contracts. I'll go and update the notes at a later time. We're just making our marks, right? Yeah. All right, let's move out to the future. I bet you the next the next thing will actually execute. And I'm gonna be heckin' mad when it does that because that gets me off right there. So let's go to 3-5. We're gonna skip some time, long-term play, staying in the game. And look at what it's done did. Look at that. That 1228 was a good buy, yay! Just explode out the mud, as John Addison was saying. I'm a network marketing fan right there. John Addison, explode out the mud. You can't get out the mud. You gotta explode out the mud. Hit up at the 247. I don't know what the heck happened here. Oh, you know what? No. I remember what's this? This was 2018 now. Yeah, this was dang, I can't remember. Was that first talks of China trade war stuff? I can't remember. But I remember that January, it was just, I didn't do nothing. I was trading at that time, but I didn't do nothing in the market because I was like, what is this? Look at, I'm like, you're not going to call that space. I'm like, what? Oh, look at all these notes I have on. What is this? Let's see if it can stop at its old support trend. Oh, look, I was making technical notes. I didn't make a note of what the heck this happened though. And bounce off. Okay. I'm making all these notes. Now I'm sharing just extra stuff with you guys. I don't know why. All right. But obviously, if we were trading on March 5th around this time frame, we would be looking at the S&P saying, see what it's doing. But look, we got the long-term trade going on right now, right? The funny thing is, what he said, yeah, obviously, that trade that I tried to put on expired, but it's still there to show you guys that I tried to do it. And let's see, our very, very, very first trade, this is the one that we did back in September, is now up 197%, $19,000 from the roughly 10,000 that we invested. Y'all happy right now, right? Right? This is 6 months later. Changing the game. I'm sure this one's looking good. What is this? Okay, so this is, what did we trade again? Let's go to it. Oh, yeah, here it is, the buy that we wanted to do. So look at, we bought it at 1948 and it's at 36.45. Let's do the math. 36.45 on the price to minus, not divided, minus 19.48. 1697 times 500 shares. We're up on March 5th. We are up $8,485 from our $9,740 investment. So let's go, divided by 9,740. We're up 87% ROI so far. 3 months later. I guess this is what happened when you pick good stocks. So Mark and Joanne have a very good point in what they're teaching. Again, all in the name of research and love. All right, let's see what we got here. So we were picking that one. So we're in March. This is not quadruple witching yet. Looking at the date. Quadruple witching would be this week, but we're at the week before. But let's look at this. This is a nice chart, right? Bounce off the 50. You created a high. You created a lower low. Something happened, but it hit the 100 simple moving average. Again, that solid rock bed of support, and then you bounce up again. And you created a new high, and now you're bouncing. Looks like you're bouncing at the 50 EMA. So we're at 2018. If we pick the January strike, what you doing? What the heck? If we pick the January 2020 strike, what are we at? We have 2 years. It's practically 2 years. So let's go ahead and do it. I'm not necessarily gonna have to wait. I like this buy point. I'm not gonna lie. I like this buy point. That's looking pretty good. Bullish for good volume. Let's take a look at bands in the bands. Bands in the bands. Snap back, bounce off. Looks pretty good of a buy point for me. So, of course, they could be letting out some future contracts in the next week on the quadruple witching. But I'm going to enter here, and then we'll take a look at next week though and see if they did release some further outlines. So you got the bands. It's bouncing off that lower end of the band, like on your on your no EMA. You can see the uptrend with the EMAs on there. It just looks good. So the other EMAs are on top, but again, long term. So we don't have to worry about that too much. So we're going to go back out to January 20. Actually, before we go there, we're going to go back to our Excel, and we're going to put stuff in. So I get my trusty note over here. We got the stock at 235.94. I mean, real talk. If somebody's playing NVIDIA during this time frame like this, which I imagine Mark probably was, we got to take care of take a look at our 2-year performance. I mean, no wonder the man is got dope. We had a guy from there on. So we're March 5th, 2018. at about 11:28 a.m. This is how technical you gotta be, because you don't want to get nobody no BS numbers, right? You don't want to say you estimated stuff. So we're looking at the close here of $32, or the start point is $32.34. And the right now price is $235.86. Over 2 years, that's just steep. So therefore, the 2-year performance during this time, 235.86 minus 32.34. We're looking at 203.52 of a 2-year performance. Like, wouldn't we love for bar chart to be able to go in the past and get that stuff for you? But for the integrity of the numbers, we gotta do it ourselves. So 203.52. So obviously it does all its math that it's supposed to do. And it tells us to buy a strike as 353.04. So we are going to pick the January 2020. We're going to pick the 350. And we see the price that's there. And this one, we probably, if we're going to do a $10,000, right? I think we can only afford 4 contracts. Yeah. So we're going to do 4 contracts. And let's see if it gives it to us. I'm going to screenshot before I try. If this one don't go, I'm going to be so mad. Look at, I've not told y'all, 2368. Look at that, at 2368. See, ooh, this is upsetting. Because that's exactly what I wanted to happen for the other one. That's exactly what I wanted to have for the other one. Because it would show all of the different trades that we're really doing. And I want to be able to show that, like show the trueness of the thing that we are trying to do. But don't worry, it's still there. It's still there. It's an expired thing. So we got this at 2368. So now we technically have the one that we did in September. We have one that's not showing on here that we did in December. And now we have one that's showing that we did here in March. Okay. So the number truly is more than this. That's neither here nor there. We'll have the breakdown of it. So that's 400 contracts times the price that we got it at. What's that? 400 times 23.68. 400 times 23.68. So we spent $9,472 of an investment on this one. All right, y'all. And let me do my thing, make sure we make a note on here. Oh, no, maybe what is it? Wait a minute. Oh. Stop clicking, man. Oh, sorry, man. All right, but again, let's make our notes. And again, I'll update the notes officially. But we have 3, 5, 18, bought 4 contracts. I'll make my note updated later at a later time. All right. So let's go to next week. Let's see if they did release a new expiration during the quadruple witching time period. Still glad I entered. Look at that, bounce off the 50, bam. See, the other thing created a new high. The other thing too is just allowing you to see what's the strategy that works. Like when you're doing your back testing, go in there and see what strategy really works of this pattern that you're looking at and that you're reading and trying to do. So it doesn't look like they released a new expiration, which is fine. just doing it for the sake of looking at it for the next week. But that's 3 quarters, right? September, December, March. Let's go to June. Let's go to, again, like 11 o'clock a.m. 11 a.m. on demand. And no lie, honestly, you guys, at this point in time, I mean, if you wanted to, you can fast forward this video because we're just going to repeat the same thing, or you can just continue to hear me rant. But this one is interesting, right? Because, let's see, we had our dip down around this area. S&P obviously had done its thing in there. And now we're at another quadruple witching time period. But would you buy at the high? Ian said no on Market Mondays the other day. I would agree, right? You would want to wait for a pullback. So here's my EMAs, but let's throw the Bollinger Bands that I'll make her dance. And it's outside the bands. Now, May 22nd would have been a good time frame, but if we're really trying to do the quadruple witching, we're going to do it within the end of the quarter. So we would really be waiting until March, June, September, December. So let's go some days out and see what happens. This mess needs to pull back for real, though. This is just too much. And I'm keeping this 2-year one daily up because I have to. But you know what you could have been doing? Hedging out of the bands, dip down. Let's hedge. You hedge from May 10th, did a trade, and May 23rd, picking your time frame of your put. Within the long-term time frame, you're doing your swing trading. It looks like we're getting some pullback. I'm gonna go back to my EMAs because that's just what I normally work off of, right? Is my EMAs. We're getting some pullback, and I would love to see it come back to the 20 and the 50 area, right? Looks like I got some trend lines on there. So that's sexy. Just gonna lose my voice right now too. It's a little scratchy. Got some pullback. I mean, we're looking for it to make a higher low, but I'm really just looking for it to at least come down to the 20. Come down to a 20. Not coming down quite yet. Or you're looking for it to come down to a 20, or you're looking for the 20 to come up, right? Or again, let's throw the bands on there. And it's inside of the bands, but it has a really pulled back. It's like flat basing right now. Damn, created a new high over there. That's the 15th. It's probably going to create a high. Let's just jump to next week and speed this process up. All right, so create a new high, pull back. Will it pull back to the 260 and the 20 EMA need it? Maybe. Oh, look at patience. Which I ain't got none. I ain't gonna lie. I have no patience. I have 5 kids. I have very little patience. I need to work on my patience, but I ain't got time for that. But look what we got here, right? I'm gonna take off the EMS. You have a pullback. You have a level of resistance. One zone. Hit it, pulling back. W, bam. Broke that resistance. Pull back, test old resistance as new support. Broke the previous resistance. Higher highs, higher lows, y'all. Did a little pullback. It pulled back. Support. Old resistance. But it's still like at the highs. And it was, again, away from a more solid EMA as the 20 or the 50. it was still, again, there was still a way, like inside of the bands, but not fully in there to get the pullback. But it looks like we're getting it now. We're getting it now. Definitely. Give me my good. I understand it's going to take forever to go, but it's okay. So, all right, throw the bands back up there so we can have something. All right, there we go. So, pulling back. Can it pull back lower? Like, we wouldn't buy on a red day. Don't buy on a red day. Let's go to tomorrow. Ooh, bounce off the 20. Bouncing off the 20. What do you think my name is now? Okay, so what is that looking like? Do we think it's going to go down to the 10, to the 50? That's 258 all the way down to, so 8. We're long term, right? 262, 7 points away from 269. Look, if you entered here for a 2-year expiration contract, who would be mad at you? It's really 1.5 years out. That's the first one you can get. Who would be mad knowing that here's the bigger picture? So, I'm sorry for the mess, but here's the bigger picture. So I wouldn't necessarily be mad if we're entering here. Look, we're already at higher prices than when we last bought it. Did I make a note of the stock price at that time? On March 5th, I did not make a note of what the stock price was. So I mean, March 5th, we'll just say roughly closed that day at 235. Stock is at 235, I think. Making a note on my iPad now. Okay. All right, so all signs point to this is not bad. You're not giving me nothing right now without telling me to kick rocks. I'm trying to do too much. MacBook Pros like leave me F alone. All right. So if you decided to wait because you wanted to go back to the 50 EMA, because that's what it really looks like, it likes to bounce on and get that good push up, I understand. I would agree. For the sake of time, let's go ahead and let's be aggressive. That bounce, looking at the bands long term, this wouldn't be a bad setup. It'll probably go down to the 50 and hit it, but for the sake of time, let's do it. It's getting late. I need to go to sleep. I take my daughter to swimming, and I'm really swimming during COVID right now. All right, so let's pull out our Excel sheet. I'm handy dandy Excel sheet. 262 is the price right now. The 52-week high was at 269. It's kind of how I feel about my XOK stuff. That mess was on fire. I'm paying for that. All right, time period. 2-year time period. Go back to where we started. Bear with me. Making notes on my iPad. We're at June 20th, 2018. Stock price is at 262.81. The start 2 years ago, over here, close of that day, 47.56. Obviously, now price is 262.81. So, 262.81 minus 47.56. So we have still ridiculous. I can't wait till I get to another stock where it's a little more realistic, I think. We have a 2-year performance of 215.25. That's a by golly low. 215.25. It gives us a strike at 386.01. So let's go. So you guys, I mean, you see how the process goes when you're doing this back testing. So 386.61, I'm going to round down. I'm going to do the 380 strike. You see the price is about 15.65. So how many times does that go into 100? 15.65. Right? Oh, that's wrong. 15. That's wrong too. 15.65. No, damn. 100 divided by 15.65. 6 contracts. So 6 contracts. Bam. 9 times. All right, cool. Let's take the snapshot just in case this thing will act bootsy. So look at my note here, 6 contracts on the iPad. We're gonna get it at, please go through it. Bam, 15.28. Look at that. I know you're probably wondering, well, why the hell didn't it work on the other one? I don't know, it's technology. So look, we technically got 4 positions right now, right? We have the one in January. Look at this price now, 35.45. And then we have the one, we have the one from December, which was selected as well from the January 2020 strike, or January 2020 expiration. That one we picked up the $290 strike, and we picked that one up at $19.48. That price right now is $39.90. That looks sexy. And then we picked up the one in March at $3.50. We picked that one up for $15.28. Price right now is $21.50. Again, this is the January 2020 expiration. I'm missing making my notes like an idiot. This is the January 2020 expiration. Fun times. But let's look at the monitor. Let's look at what we're really up, right? This is our overall that we're up on everything. The accumulative overall based on the symbol. If I go more specifically into activity and position, here's the 3 positions. So let's see. We picked this one up at 23.68. Oh yeah, the one from March, the one we just did, doesn't seem to be doing too sexy. But look, the very first trade up 226%. The second trade that's not showing on here, I just showed you the price of what it was. This one's at minus 10%. And this one, obviously, we just put on. This is why I'm kind of upset about the second trade, because I wanted it to show here for you guys too, so you can really see. Maybe I can get that fixed. But we shoved out a lot of money, and the very first trade, obviously, is the one that's giving us back the goobers of money. But the second one is giving us back goobers of money too. But again, all in the name of research. Just quadruple witching. Rolling fours long term seems to be working. All right, so 2000 and so now we did June, and so let's go to September. Now September in this case is where we would most likely be exiting our what did I do? I didn't do something right. September of 2018 is likely where we would be exiting our first trade because that expiration expires in January 2019. So we technically would not want to be kind of still in this one. So we're going to go ahead and exit that one this month. Now, look, I know we can roll it. I know there's the whole aspect of rolling it out and then just buying new contracts. Maybe I'll try that. But for the sake of just the time, like we're just gonna simply exit, okay? We're gonna exit. Yes, we can roll. That's what we should do. That's what we could do. Or you could just exit. I mean, you can do what the heck you want to do. Okay, so it's gonna look like so here's the real time. Jesus. Is just kudos to y'all who got NVDA. Now, here's an interesting thing. Oh, you know what I didn't do? Damn. Low battery on the headphone. June 20, 2018. June 20, 2018. I didn't make a note. So I gotta make a note. June 20. All right. So even look at, remember what I said, y'all? This thing was gonna probably come down and hit the 50. We would be heated right now. I mean, we would be like depressed looking at that darn contract that we just bought all the way up here at 262 and that thing came down to 237. Sometimes patience is key, but yes, the long-term aspect. And it rolled, it looked like, oh, it'd be so bad. But it's neither here nor there. So let me make a note. On 6/20/18, bought 6 contracts. Look at, I mean, damn, yeah. I knew I had a feeling. I was like, this thing's gonna come down. But you know, nobody would have been mad at you because you're like, it's hot. But it came down. Are you still making money? On your June play, you'd be up 11% now after 3 months. Look at, we're at 319% on the first one. There's probably points where we were at a higher ROI, but if you're looking to exit around the right timing, because you wouldn't hold so close to the expiration on your very first trade, exiting here is who's mad at 300% of big money? No. Said nobody. Wish I had a meme post up on there. This is a little problematic though because we're at that explosion. Now in September we want to enter into another one. We have to wait for this bad boy to draw back. But I would imagine you'd be exiting before the next quadruple witching because there's a lot of selling, a lot of transactions that go on in the 2 weeks before. Or you probably just have a trailing stop on your first play now that it's bounced up and created some new highs. So I'm gonna take a pause real quick and try and do something because I really want to get that second trade we did up there. I'm gonna pause the recording and see if I can get that fixed. Be right back. All right, y'all, I'm back. Try to fix that trade from the December. Tried to go back in time to December 2027 so I can have it show up here. It just still wasn't popping off. But what I went ahead and did was place it here so you can see it like this is a good to cancel. And you can see what we were trying to enter it at and what the mark price is for that contract that we went after at that time. So You know, also had to get some lemonade sip on because my voice was about to go. It's getting late. I need some music too. Everybody in the house is asleep. I don't know what I would do without all of my crew. Listen to some Carters. So let's groove though. So back in the move, right? We're at we did 1, 2, 3, 4 quadruple etching, right? And now we're at a point where we would technically exit out of that first trade. Okay, so we created a new high. I'm sure you would put in a 10%. You know, we're 3 months, technically 3-4 months away from this expiration here. So we need to exit out of this contract. We're up 315%. So who would be mad at you at taking your profits? No, especially since, you know, you're coming up to it. You know, the trade is 1.5 years. You're looking at pretty much a year in this trade. And that's okay based on the contracts you were given. So let's go ahead in this system and let's exit out of this trade. So we're just going to take it. We're going to exit out of this trade. I'm not going to actually see. The thing is, I don't want to necessarily roll. Create closing order. Create rolling order. I ain't never rolled a stock. So, what is it saying I would do? Oh, it's saying I would sell this, and then I would buy in March 2019. No, I wouldn't. I would actually go for. Ooh, I done messed all that up. Delete. Let's go. Create a rolling order. All right. So I would not want to buy the March one. I want to buy. Oh, that's why it's not doing it for me. Where's it from? Oh, that's why it's. My Zoom instructions are getting in the way. All right, so I would buy the January. So here's the tough part about doing this roll, right? Consider this. Here we are right here, where we've created a new high. On the technical pattern, right? Technically, let's pull up the Bollinger Bands, right? We are riding on the top side of that band. Would you exit here? I mean, would you roll here? Would you buy a new contract 6 months out here? Not really. You'd wait for it to pull back. So doing a roll here means that I would exit my old position, buy some new ones. In this case, I wouldn't buy new ones at this price, but I would be more than happy to exit, right? And yeah, you're creating more transactions, fees, or whatever, but you made $30,000. The air is different up there. The water is probably even different. He's probably sipping on some like Fiji alkaline, something that's really good and juicy. But you wouldn't roll here. So for the sake of this exercise, I'm not going to roll here. We're just going to exit that trade. So I'm going to go back to the monitor. I'm going to say, okay, we're at 319. Let's create the closing order. We're going to sell. We're at September 4th, 2018. And we're going to exit our 9 contracts at $44.80. Let's see what that gets us. Let's see what the true price is. $45.15 is the true price. $45.15. So now we're out of this position. Obviously, we zeroed it out there. And Overall profit year to date, $50,000. That's considering what we just locked in, but also what we have in play. Or our P&L to date. Oh yeah, P&L to date is still right there. So, I mean, look at how much money we made on that trade. It's beautiful. Take a screenshot. One time the week got the text. Moving on, taking the next. Percent. All right. Now let's look for our next opportunity. Make a note here. So September 4th. And of course, this is not a good buy point. I'm gonna go back to what I normally look at. Ugh, but you're not gonna give me because of the Jake. You're not gonna give me that either. All right, whatever. Let's go. Let's see this bad boy pull back. I'm gonna try and speed this up. Oh, we got some pullback. All right, we got pullback. Market's pulling back. I don't recall what happened September 2018. But we got some pullback. Was that midterms? Midterm election? Don't pay attention to politics. It is. Oh, look at it. Got a bounce there. Right about 11 o'clock. Let's be more patient and see it get to the 50 this time around. And then let's also see if we're going to get a new expiration date. Because you technically, oh, that's a nice bounce. 20. Kind of a zone right here. Like resistance, support. This one really never needs to cut game. We need some holding. Let's see. Some support area. I mean, if you came down all the way down to the 50, you would be testing this old resistance, which is lower than this one. But you can kind of predict that this is a bid section. It just so happens on 9-4 that we sold at the high. I didn't do that on purpose. I did not do that on purpose. Looks like I know. 9-4 sold high. Sold. I can't spell sold. Sold first set of contracts. So let's see here. Bouncing off the 20. We kind of paid for it last time when it didn't. What's the S&P doing right now? I used to make a lot of comments on him and stuff. But all right, so the S&P hit a zone of old resistance becoming new support, bouncing off on the 20 as well. When you're in real time, you're looking at stuff like that. So that makes sense for you to go with NVDA and say, you know what, that may be a good time frame. Now, triple witching's not until next week. We're in 2018. Would they release the 2021? Would they release the 2021? Honestly, hell if I know. But you know what? Let's see if they do. Let's just keep going. If this continues to bounce up, you're going to be mad, though. Look at that. Oh, it's looking really good. September 12th. Oh, look at the patience. Wow, look at that. In the 50. And we're coming closer to the next week. That's like a beaut. And then you buy on the green candle, right? We're just gonna go until Monday, because that's if they're releasing new contracts, that's the day it'll be there. But I would be pissed because look at how much we've already missed. All right. So the only reason why you guys are going all the way here is because I want to see if they released new contracts, and they did. Okay. So where are we at here? We're at still bounced up. It's above the 20. It looks like it's doing a little sideways thing. Let's see what the S&P is doing. S&P got there, but now it's pulling back. It hit the 20 EMA. Let's go back to NVDA. It's funny, like doing this right now, you're not as emotional, but when you're doing it, you're in your emotions. Like, oh, am I doing the right thing? Am I picking this? Am I doing the right thing? Okay, kind of grabbing that right there. Look at where it came. It's coming there. We're still at 11 o'clock, like Pacific Standard Time. So the market has like 2 more hours. But we're glad we didn't like buy here, right? Because it ended there, and now we're down a little bit lower, testing the 20 again. Market's bouncing up. Let's see what we have if we start to have a green candle on the 19th. But we already know what we're having next. Okay, so definitely glad we didn't buy, right? Patience is working out for us this time because we learned from last time. I still think this was nice, but we have to wait to see if there were newer contracts. Let's go to the 20th. Wow, look at that. I mean, if you have rules on basically buying when it hits the 50 or bounces above the 50, and you're looking at long term, that's good stuff right there. For our bands and maker bands fans, pull back. It wasn't really outside the bands, but went out in the lower part of the bands because it's contracting. Let's look at 21st because this is a tag off the 50. Sitting there on the 50. We're looking now for the bounce up. This is definitely a better buy point. Oh, look, it broke down, but that wick is around the 100 simple moving average. Be problematic if we got in. You don't have to buy the week of triple witching. I learned that. I learned that. Huh. This is not bad. It's above the 50. It looks like it may close there. Let's see what it does. Let's see what the result of this candlestick is and what tomorrow looks like. That looks promising. Right? Now we wouldn't necessarily buy on the red, but this is about 11 o'clock, 11, 15, 11, 13 on this time frame. So let's go ahead and enter. Let's go ahead and enter. Let's do our thing. We got a bounce where we fill off the 100. We're back up above the 50. Oh, and let's look and see what the SPS is doing. Oh, don't you start acting funny, think this one. S&P is looking like it's making their green. So come on and be a big thing. But look, aren't we glad we sold those first set of contracts there and didn't wait to roll? Nah, yes, we are happy. We didn't wait to roll. We would have missed out on some good money right there. That's what, 285 down to 267. Come on now, who wants to give up $20? No. So if you had your trailing stop of like 10%, you'd be happy that you would have been out like right in this area. All right, so let's do our math. So what date are we at? Making my notes over here. iPad game. September 26, 2018. We're about 11:14. Right now, stock price 267.30. Where did we start on this 2-year time frame? We started all the way over here. I got my thing on the 2-year. We are at $64.34 is where we started. Our 2-year performance, 267.30. 267.3 minus 64.34. 2-year performance is 202.96. 2-year performance. Crazy. All right, Excel sheet. I wish I could move faster, but it's kind of like you really can't. Let's fix it on. So. All right, stock price 267.6. So this is the high. Oh, we didn't get that. That's the high. The high 285.22. 285.22. 2-year performance 202.96. Do its math, do its math, do its math, and it tells us that we want to buy. Look at that, another 380. So strike that is giving us is 382.91. So we're gonna buy the strike again that looks like it's about 380, but this time we're gonna buy the January 2021. Let's go. January 2021. Does it have a 380? It has a 380. Ooh, looks like nobody was buying this at this time. Do I want to be the only person buying it? Probably. Well, actually, no. I wouldn't want to be the only one that's buying. Because look at look at the spread there. But again, staying true to the game of what we're here to do for culture, right? So let's just be obedient to the process. It looks like I can only afford 4 contracts if I'm doing my thing and we continue to do $10,000 roughly, right? Dang, that's even more. But you know what? We got more money now. So yeah, I'm gonna do 11,000. It is what it is. 4 contracts, and let's take it. Oh, you gonna be boo boo and not do it for me again? You guys, this really does upset me when it doesn't do this. Maybe it's because nobody wants to buy that one. I bet you it's gonna do this to me on this one too. 4 contracts. Is it gonna do it to me? This is more our speed though. Look at what? 2470. 4 contracts, 2470. 4 contracts, 2470. But this is at the 390 strike. So forgive me, you guys, for skipping and going up to the 390. But for the sake of, I really want this number to be inside of here, and I really want it to show on here. Let's go ahead and do that. And let's see like what's going on right now though too with our old trade. So look, like we got out the first one, right? We are down 25% on this on the third option, the third set of contracts that we did. Remember, we did September. This is the one in December, so we're definitely up. If it would have went through, we'd be up on that one. This is the December trade. This is the March trade. This is the June trade, and now this is the September trade we just did. Okay, we're down on these ones. And why is that? I mean, there was choppiness. After the June trade, it's choppiness. The March trade, choppiness. Like that dip did something to us. But that's okay. So let me go here and make my note. On this day, it's technically like what's the green candle in the purple? I don't know. What day is this? 9/26/18. Bought 4 contracts. Again, like I said, I'm gonna go back and update these notes better for us. So, ladies and gentlemen, are we still profitable? Yes. And I'll like put the big numbers in there. But really, like when you think about it, the profit that you made here has paid for the next 2 to 3 quadruple riching if you're going to invest another 10,000, right? That's what it's doing for you. So you're looking pretty good. So let's go to December. I'm going to continue to do this for some months, but I really wanted to kind of just show, shit, what happened here. All right, so, oh, look at you, you good to cancel Buster. Oh man, that contract went through. They said, yeah, take that and look at this. You're losing all your money. You're losing all your money. So this is not sexy. And this just threw off everything that I was doing. But that's hilarious. That is freaking hilarious. Making me have to really like reassess everything that we was doing. But that's okay. Let's see. When did this thing dip off? 10-2. Dip. Damn, what happened in October 2018? That's China trade talks, I think, right? It's like Christ's masterpiece. Oh yeah, I got another one. What happened? Feds announced raising rates for the second time this year. President Trump announcement followed in the afternoon. New all-time high. What's another way on this? 926. Oh yeah, this is trying to trade war talk type stuff. All right. So I'm going to end this portion of the video here for one. I'm sleeping. Throat's almost out. But also now I got to kind of go in the past and kind of fix some stuff. But if you're following the market and you see that it's doing this, and Trump started talking some hot mess, and the China trade war stuff was happening, you definitely would have stopped out somewhere in here. You would have stopped out somewhere between 10-1, maybe not even 10-1, but you would have stopped out somewhere between 10-4 and 10-10. With the stock market doing this, you would be like out, right? You'd be like out. Because now look at what your positions are looking at. We're in December 2018 right now. Look at your September play is down 86%. Your June play is down 94%. Your March play is down 94%, and that Bootsy trade, that Bootsy good to cancel I had just executed like an idiot. But this initial one that we were trying to buy in December 2017, we were trying to buy that at 1948, and right now it's giving it to me at $3.55. So I wouldn't do that. And listen, NVDA dropped from its good graces of 289 all the way down to 140. Wow. I mean, that's before we even started doing this thing. So real talk, ladies and gentlemen, you would have stopped out somewhere, especially if it broke well below that 200. Once it started doing this, I'm so sure you would have been out. So for the sake of the last part of this video, let's go to 10-9. Because I'm sure here you'd be shooting breaks. So let's go to 10-9. And let's see what our positions are looking like. 10, 9. 8. Bottom of jet. 10 after that. All right. What's this drop? Regression line. What's this drop? Come on. 10%. 10% correction. You just entered here, right? On 9/26, you just entered here. You're happy up here. 10% correction down here, you're not really sweating it. But once it starts breaking these levels, you're like, I'm out. I'm out. Don't act like you're not out. You out. And if you're not out, you just must have knew the crystal ball. You had a crystal ball, but NVDA would do. But hell no. I'll be out. So let's see. What are they doing right now? Okay. What the hell is this? This is not right. This is fudged here. So don't look at this, y'all. This is the one where we would have been in at 1948. This should really be 1948. Okay. It should not be $3.55. This would be This would be $19.48 because that's what we were trying to get it at. So we would be at 37.10 in 1948. So with that being said, let's do that. 37.1 minus 1948. Right. We're up 1767, so we divide by 1948. Come on. Divided by 19.48. We're up 90%. And that means that we were up higher than that a few days ago. Right? Here, we were definitely up more than 90% on that play. We're probably at like $40-something, $45. The hell are it? Let's just do it. 10-2. 10-2. Here we go. I believe we made it. This is what we thankful for. Pre-buffing game. Yeah, look, we're at $45. So we were definitely well above where we wanted to be. Okay? So in this case, we would have obviously let it ride, and then we would come down 10-9, see it do its thing, and we would be nervous, right? Oh, that thing's just gonna stay there. Huh? Come on, man. Oh, you're just gonna stay like right there in the middle of the entire screen. But you're gonna be like right on line right there. Oh, I like that. Okay. So like on 10-9, we're at 37.20. We would stop out at this point. We would stop out here or at least maybe not here, but if you maybe even had a 10% stop out there, which I don't think we would have because we're not at 400%. But this is a tough decision, right? This is where you'd be hedging, and also too where you'd be like, all right, we're at a point where I got to get out of those trades because on your first one you already took your profit and ran. On this one, you are profitable. On the other two, you're not looking too good. And then when it goes to 10-10, no boss, maybe you're not a boss, you've got a boss. That's my jam right there. Yeah, boss. Yeah. First time. 8 million, 3 million, watch. Maybe not a boss, you've got a boss. I take it personally. You would be out, y'all. We'd be getting out. Hot always 10 months before the fall, almost certainly. Disturbing what I gross. Survey says you're not even close. We be out, ladies and gentlemen. We separate the men. But over here we measure success for how many people? Right, you don't want to say you broke. Over here we say you broke if everybody is broke except for you. Come on, lift the cousins up. So look, I'm gonna leave y'all for this one right now. If anybody decides to watch this video all the way through here, I appreciate you. It's all good. Robert Williams, IG, The Emotional Trader. But we're gonna recap here. But look, I would say we'd all be out, right? You have some wins, you have some losses. But look, you lock in profit on your second trade. On that December 2017 trade, you'd be locking in profit. If not here on these days, this day. And then you're getting out of your other trades. You're getting out of your March, your March and your June, because look at now you're running up at 34%. You're running up at 34%, and you are about. Actually, I don't know. Now I'm looking at it. I don't know, but I think you still would be. I think you still would be because we can run this up. Let's do it. Let's run it up. Let's run it. I said I was gonna be done, but let's just jump to the future. Let's just jump to June 2019. Let's just do it. And the purpose of this is to see what these two would be looking like at this point, because they don't expire until 2020. So let's go to June 2019. All right, and this is me straight up cheating. Not gonna lie, straight up cheating. But this, I would probably be out. Why is this thing? Why am I at minus $99? What's the stock there? Oh, yeah. Yeah, we would have been out here. We didn't want to ride this. We would not have rode that. There's no way you would have rode that. So stopping out here is the best bet. Even if you waited until it broke the 200 on 1010, like you waited until 1011, we would not have rode this. But NVIDIA has had a hell of a run since then. Nonetheless, this is why we do the back testing, because we can see that it works. We see there's some losses. But what you would do, what would you do right now? You would be going and playing puts on this, right? If you're a follower of NVIDIA, you'd be playing puts on this if you're doing contracts. But we definitely, I definitely would not have done that. So we just cheated. We just saw that we pretty much lost all our money there. But nonetheless, if we went back, where were we at? We were at September, and we had gone to December. No, we had gone to October. October 11th. It would be safe to say ladies and gentlemen, that you exited out of this trade before October 11th. So you locked in better profits than this, and you would have definitely been out of this, so you wouldn't have lost 50%, and you wouldn't have lost 50%, or you would have lost 25%. Most likely you would have exited on 1010 or 10-9. That's better to deal with. That's better to deal with. All these numbers are better to deal with. You would have exited on this day when it's just breaking, and you're like, what the hell is going on? China, Trump, what are you guys talking about? What are you doing? You would have exited this day. So technically, this kind of ends our aspect of doing the rolling fours or the long-term trades on this. So we'll leave it there. I'll recap everything, clean up this chart, or clean up all my notes and stuff. And we would say that we exited all positions on 10/10/2018. And then recouped when it made its bottom and started its uptrend again and said, let's give NVIDIA another chance to do its thing on quadruple glitching in 2019, right? And probably do a second video with the second half of that. So much appreciate anybody who continued watching up until this point. This is my, second ending this time? Your boy, Robert Williams, IG, The Emotional Trader, trying to just help give some perspective as to what we got going on here. So, fun times. Deuces, everybody.